Good afternoon. My name is Chris, and I'll be your conference operator today. At this time, I would like to welcome everyone to the Halo Q2 2019 earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star and then the number 1 on your telephone keypad. If you'd like to withdraw your question, press the pound key. Thank you. Kiran Sidhu, CEO and co-founder, you may begin the conference.
Hi everybody. See, I have a lot of attendees. We have a lot of attendees. Thank you for attending this call. Joining me is my fellow co-founder and our CFO, Philip Vandenberg. I'm going to start off with an introduction to the company. I'm going to try to keep it at 5 to 10 minutes. Philip will follow by going over our results. We've already received numerous questions. I've picked 7 questions to answer, and then afterwards we'll open up the floor to questions. We're going to take at least 5 questions, and it'll be limited to 1 per person. Okay, to just start, let me give you an overview of our company. We are experts in cannabis oils and concentrates, and our mission really is to build brands and launch innovative products. We currently operate in 3 states and are now officially in operation also in Lesotho in Africa. We've delivered robust organic revenue growth. To date, we haven't made a significant acquisition. And we've been, collectively our team has been in this space since 2013. In terms of our product offerings, we probably currently offer 30 different products. That doesn't include strain or flavor varieties. And we segment our products into, I would say, 6 different segments. The first one being an ultra premium segment, which is our Guilt line of products, which includes the dab tabs, which we have under either exclusive or under license by ELO. We have premium products, which is principally our Exhale product line. We also have edibles. It's under our Hush line. We also have a mainstream line in Nevada under Black Cat, and we have our mainstream line in Oregon and also in Oregon under Mojave, and we have everyday value of Hush. Currently, Guilt and Hush are being sold in California. We plan to be aggressively expanding that within the second half of this year. We've, spoken a lot about dab tabs, and dab tabs has gone from let's call it earlier this year to a one product SKU to now a full assortment. So under dab tabs, we obviously have our half gram and gram offerings in multiple flavors. In the states that we have dab tabs in, we're going with ultra premium live resin. It seems to be selling the best. At the request of our dispensary partners now, we've put together some specific devices. Many of you may or may not know I have a little bit of a device background in the cannabis space. So one device we have, which is for a heavier user, is our Shatterizer device. And that Shatterizer device is right now, we've just launched it. It's selling. Our first shipment that we sent to Oregon is sold out. And recently, we've, with ELO's help and their design, we are launching the Go product, which is more geared towards the vaporizer user, which looks just like a 510 thread vape pen. Going over our various markets, Oregon is is always been our home market. That's where we started. We have 12,000 square feet of indoor manufacturing space and 7,200 square feet of courtyard space. We have, and in Oregon, we're end to end. So we also have 6 acres of our own cultivation, which is exclusively used for extraction. We do not sell pre-rolls. We do not sell flower by itself, even though we have done that in the past. And we also have there our manufacturing facility, distribution, and sales. So we go everywhere from seed to the store, but in any state we operate, we currently do not own stores. In Nevada, we've been operating since, I would say since October of 2018. We have an 8,000 square foot facility, of which we're occupying approximately 2,000 square feet. We have a business where we buy oil in bulk currently, and we formulate it into different brands, and we sell it to dispensaries. We currently have the 3 brands active in Nevada, and currently we've sold, I believe, in the last 90 days into about 22 dispensaries. Nevada, as we've discussed, we have under contract to purchase with money down 3 licenses, which is a production license, a cultivation license, and a distribution license. To us, we believe the key to Nevada is cultivation, and I'll discuss that a little bit later in the Q&A. California is really where right now almost all the efforts and all of our top people and everyone is focused on. In California, we have 15,520 square feet of licensed facility. And of that, we're currently operating in 1,700. I think the next 8,000 square feet now has been approved by the state for distribution and Type 7 manufacturing as well. And we have conditional use permits by the city. Now we're just hitting hammer to nail and building and hoping to bring up extra capacity in Cathedral City, which is where our campus is, by the end of the year. We're currently clipping almost at full capacity in our 1,700 square feet. We're producing about 10, I'd say anywhere between 8 to 12 liters a day, depending on the yield we get on our machines. Our principal customer at this time is Falcon International, that is under contract to be acquired by Harvest. And we're starting to really aggressively now build out our dispensary business as our bulk business now. You know, as we validated the bulk, now we're going to move to dispensaries like we have in Nevada and in Oregon. To that regard, we have 2 distribution partnerships, a smaller one with C4 and a larger one we just announced with Nabis to bring product into the dispensary channel. In hemp, we announced that we're putting up a facility in Oregon to basically principally process isolate. What I've said to people many times about that is that this is a commodity business. Part of the reason we're in this is because we have farmers that want what is known in our business as toll processing services, where they pay us a fee to take their materials and take that material and convert it into CBD isolate. In addition, we have partners who are seeking CBD isolate, and so that business really is more of a business that was set up with customers in mind as opposed to a greenfield style business. A lot of people don't know this, but I believe that Oregon is one of the top 3 or 4 production states in the United States, just to be conservative, let's say top 4 in hemp. And in the Rogue River Valley, where we're based in the heart of Oregon's Emerald Triangle, there's ample hemp currently being being grown. Lesotho, Africa, currently we have a partnership there. We have a contract out to buy that for a fixed number of shares, not a fixed price, especially in this market. That's good, which is 18 million shares, I believe. Philip can correct me if I'm wrong. And I'll talk a little bit about that because a question came up on that. And that overall is our business. And I think what I'd like to do now is turn it over to Philip to talk through our results and our overall performance through the first 2 quarters of the year.
Okay, thank you, Kiran. Turning to the performance of the company and discussing the numbers. Revenues for the first 6 months to June 30, 2019 were 18.3 million, compared with 4.3 million in the 6 months to June 2018, which is a 329% increase year on year, predominantly explained by the first-time contribution of Coastal Harvest and HLO. Coastal is in California, HLO is Nevada. and we had an 11.8 increase in revenues at A&M in Oregon. Turning to the operations, A&M revenues were $5.7 million versus $5.1 million in the 6 months ending June 2018. HLO generated revenues of $1.3 million, and Coastal Harvest, which only took off in January when we started, actually produced stellar revenues of $11.2 million. Those two, HLO and California, were first-time contributions. The increase in revenues is explained by a 262% increase in grams of distillate, shatter, and live resin sold, and a 28.9% increase in the average achieved price in comparison with the 6 months ended June 2018. The increase in price is predominantly explained by the higher prices in the operations in California and Nevada in comparison with Oregon, and also because they were first-time contribution. I will talk a little bit more about pricing later. Excluding the contribution of the new operations, the increase in grams of distillate and shatter sold was 30.1%, and the price declined with 4.5% year on year in Oregon. Turning to gross margins, the group gross margin for the 6 months to June 30, 2019 was 20.2%. Within that, A&M in Oregon achieved a gross margin of 11.8%. Coastal Harvest achieved a gross margin of 30.7%, and HLO achieved a gross margin of minus 1.8%. Turning to EBITDA. Coastal Harvest achieved an EBITDA of $2.7 million, which was a first-time contribution. There's no comparison with last year. Offsetting the operating loss at A&M in Oregon of $1.4 million and $727,000 loss at HLO in Nevada. And there were for startup operations at ICL 9 and 13, which are not in operation yet, there were some losses of $33,000. The total contribution from operations was $544,000. Total EBITDA was minus 5.1. The difference is explained by the corporate overheads of 5.6 million, which is just over 900,000 per month, which is also close to the burn rate of the company at the moment, which is around $1 million per month. Turning to the operations, in the 6 months ended June 30, Oregon sold 212,000 grams of distillate and 410,000 grams of shatter, an increase of 30.1% in comparison with the 6 months ending June 30, 2018. The price achieved for distillate was $14.46, which was a 1.9% increase year on year. Shatter sold for $4.47, which is a decline of 25.3%. Year on year, the combined effect of those two is a minus 4.5% price decline. Q on Q, the price decline for the combined distillate and shatter sales was minus 1.4, so price declines are abating. Distillate was plus 4.1%, and shatter was minus 13.7%. But the trend is the declines are abating. The conversion yield achieved on the conversion of trim to produce oil was 7.4%. In the 6 months ending June 30, 2019, Coastal Harvest sold 742,000 grams of distillate and 320,000 grams of live resin. The price of distillate was $7.08, live resin $11.29. The price Q on Q, there is no annual comparison, so to give you an idea about the trends, the Q on Q distillate price declined with 14.8%, and live resin went up with 2%. HLO in Nevada sold 47,000 grams of distillate at a price of $28.74, which again, there is no annual comparison. A Q-on-Q comparison was minus 10.5%. So there is a pricing pressure, which is not surprising. Turning to the cash flow, the use of cash for operations for the 6 months ending June was 9.2 million, which includes a loss from operations of 7 million and an increase in working capital of 2.2 million. Basically, it's reflecting an increase in receivables not being offset by an increase in payables. And predominantly, this is in Oregon, it was 1.3 million, and in California, receivables are 5.3 million, where we are working to get the cash from the sales that we've achieved so far. Inventory was flat at about 8 million. There's a lot of inventory in Oregon, although it's down, but it's still 4.9 million, which has to do with the fact that we have our own farm and we are using the harvest from our own farm in our production. California had inventory of 1.3 million. Capital expenditure was 1.3 million. Last year there was a release of expenditures because of an adjustment in the purchase price of an intangible. Share capital, the net debt to equity is 5%, and if I take away the restricted cash, our cash is about 7.5 million at the end of June, but there is restricted cash in there of 2.2 million, which relates to the convertible that we have. Adjusted for that, the net debt to equity is 15%, so the balance sheet is very healthy. Share capital in the shareholders' equity is 45 million, options and warrants reserve 5 million, and accumulated losses stood at 29 million. The company did a convertible in April. The company raised $15.8 million US, and after fees that was $13.6 million. Currently, 6.8 of that has been converted into share capital, and 6.8 million is still outstanding. The company has 1.8 million of short-term debt, which we're looking to convert into shares if approved by the board, and that would add 5.9 million shares to current shares outstanding of 190 million. We also have, as we announced in the press release, we have some payables and a conversion of payables and also of salaries of some of the executives. They convert, and that would add 11.4 million shares. Cash at the end of June 30 is 7.5 million, with 2.2 million of restricted, and the current cash position as we speak now is in the region of 5.5 million. This concludes the review of the Q2 results.
Thank you, Philip. We've received a lot of questions, so I'm going to answer 7 that are most representative, and then we're going to open the floor up for further questions. The first question a lot of people have asked is about buffalo. How is the progress of the buffalo takeover? And anticipating that the buffalo takeover will happen, what is the plan down there? How much capital is required to get going? And what is the plan to raise the necessary funds? So we anticipate closing the acquisition in September. As I emphasized before, it's for 18 million shares. The first phase has been funded by buffalo investors themselves, which is the establishment of 3 hectares of greenhouse grows. The plant should be in the ground in November within the greenhouses, and the harvest will be by March or April. I was on a call this morning, and we're looking at a minimum of 1,000 kilos of usable marijuana. We're planning our first export in May, and we're currently negotiating offtake agreements, both in Europe and in Israel. And we're working with a European certification firm to get all the necessary qualifications done. Louisa, who will join us as our chairman upon close, and the team in Lesotho are in discussions with traditional banks to finance the next phase of growth, which will probably happen by Q4, which will include an oil manufacturing facility and a 200-hectare outdoor cannabis grow, for which we have provisional approval. The one thing that's unique about Lesotho is this ability to grow cannabis outdoors. It's a pretty unique situation, let's say, outside of North America. And by being able to grow outdoors will allow us to export both THC distillate and CBD isolate at very competitive costs in 2020. In terms of numbers, right now I think the market for usable cannabis in Europe is around $4.50 a gram, and we're anticipating conservatively a first harvest of usable cannabis of about 1,000 kilos. So that answers buffalo. Regarding the recent numbers, is the company still on track with the $48 million US target for the year? So our annualized run rate is currently roughly $40 million. In Q3 and Q4, we basically need an incremental $8 million of revenue. We signed this deal with Nabis for California statewide distribution, and the key is to really utilize what we've learned in Oregon, what we've learned in Nevada, to start generating meaningful dispensary sales in California. One thing I would emphasize, it's all about quality and not quantity. So for instance, Ease as a dispensary alone, I think estimates are somewhere between 10 to 12 million a month in revenues. Caliva, very large dispensary chain. So I think the key with us is not to spread to every small dispensary far and wide. I think there are roughly probably about 600 dispensaries, or last I checked it was 543, but the number keeps growing in California that are active. But the key is to work with larger chains on white label solutions, which we're really good at, and also to lead with our dab tabs and the other CBD product, the XCS product we just introduced, in order to gain traction in the larger dispensaries and the larger chains. Nevada. Nevada revenues are slow. What's the problem with the state, and how do you plan to get Nevada going? What I've always said to everyone about Nevada, the key to unlocking Nevada, which was important to us early on in Oregon, is to have our own biomass supply. A lot of people mention Flower One and say, God, they're growing so much biomass, and other people are growing so much biomass out there. But when you speak to them, you realize that what they have available for extraction by their own targets, if they don't use it themselves, is maybe 25 to 30% of their usable marijuana. So when we grow for whole plant extraction, which A gives us better yields, and B gives us a competitive cost advantage, then we actually now are in business like we are in Oregon, where we can be the hammer. We can be the ones that are cost effective. The big thing that's been holding us back has been getting approval from the county, Clark County, to move the site to a 15 to 20 acre site within the county approved for a grow. We think we're really close to that, and we're really close to a positive announcement. Once we know we have the biomass, which is 2 to 3 times the cost in California, as you can tell by the cost of oil, I think then we have, as I would say, then we have an integrated solution where we're going again from seed to dispensary like we do in Oregon, with a sustainable advantage on cost based on the fact that we have our own grows that are optimized not for flower, not for bee bud, but they're optimized in such a fashion for extraction. Question we always get asked, are you looking for acquisitions? And Louisa, our chairman-to-be, said something interesting to me. She said, when market conditions are tight, as they are now, and they're not good by any stretch of the imagination, the amount of M&A discussions will increase. And some investors have said to me, sort of naively, well, why would you ever do an investment when your stock is down 50% off your high? Well, to be quite frank, the entire market's off 50%. So whether we merge or acquire someone at 100 and 100, or at 50 or 50, or at 10 or 10, everything relatively moves. So in terms of targets, we're looking mostly in California. And what we're looking at is targets that expand our product suite, our white label business, and our distribution capabilities. We're also looking at some other acquisitions in a few key Western states. And we hope to have some positive news in short order here. We also are continuing our discussions with various MSOs on potential joint venture opportunities where we can manufacture our proprietary products or use our techniques in their facilities, especially in states where there are limited licenses. And eventually, given the amount of capacity we have in California, a lot of them, or some of them, a select few of them to be precise, are also interested in partnering with us given how much space we have. The next question was, do you think Halo could be a takeover target and have other companies expressed interest? So I combined two questions. Markets are tight right now. Cash is limited. Everyone is speaking to everyone. And larger companies continue to express interest. But we really, frankly, think that we have more legs to run and more revenue to grow. So at this point, obviously we'll do whatever's in the best interest for shareholders to maximize shareholder value. There are no two people more invested in this company as shareholders than Philip and I. And when you add Andreas now, we take all our salary in stock. Historically, we've always loaned the company money as far as shareholder loans. So you don't have people who are more invested in the company in terms of the share price than the three co-founders. But yeah, right now we think it's early, but again, we'll be opportune. Do you expect the next quarter will be even stronger than the previous one, but maybe not the second half of the year, but maybe not the next quarter? Again, we don't give quarterly guidance, but we believe that the second half of the year, by inference, will be stronger than the first half since we're sticking to our $48 million number. And those were the 7 questions that I have, and now I will open up the floor, or I'll ask the moderator to open up the floor for questions from other people at this point.
Certainly, thank you. At this time, in order to ask a question, press star and then 1 on your telephone keypad. Again, that's star 1. We ask that you please limit yourself to 1 question. We'll pause for just a moment to compile the Q&A roster. Your first question is from Eric Ross with Cassen Securities. Your line is open.
Hi, guys. Congratulations on a terrific quarter.
Thank you.
I'm interested to hear a little bit more about, you gave us a lot of information to work with and took a lot of the questions that I expected to ask, but we are interested to hear what's going on with the pricing environment in Oregon. You had said a one-liner that you think it has bottomed, but it has been down pretty hard over the last 6 months. Looks like it's slowing a little bit, but maybe you can talk a little bit about what's driving it and why you think it's a bottom and why you think that that's a big opportunity going forward.
Philip, do you want to take that, or you want me to answer?
Yeah, or is it if you look in Oregon, I'll give you an idea of the kind of the 6 months and the Q-on-Q, and then to see what happens. Like 6 months for Shatter, and Shatter has always been under pressure for a long time now. Came all the way from $8 to $4.74. And that's kind of, in the 6 months, is minus 25.3%. But that breaks down in minus 31.4% in Q1 and year on year, and minus 17.7% in the 3 months year on year to 2018. And if you look at Q on Q, there's not Q on Q year on year, but Q on Q, it's minus 13.7%. So that kind of tells me that it's still declining, but the decline is abating. So where the bottom is, I don't know, but I can tell you that in our case, we are producing close to break even. It will not be different for others, and at some point, people will stop producing, and that's when the price can start moving up. When it is, I don't know. If you look at a distillate, that's actually pretty healthy. Like healthy, I say that, but for the 6 months, it was like plus 1.9% year on year. But then if you look at Q on Q, it's actually plus 4.1%. So it's almost like a small acceleration. And also, if you take into account that there the price is around $15, that is very helpful against a price of like $4.74 for shadow. That's pretty much it. The thing also to understand in relation to like prices go down, but at the same time, if you look at the chart, trim, which is the most important component of raw materials, is actually going down at least as fast as top line pricing. So a lot of the margin can be preserved because the raw material is going down as well. And we are always looking at efficiencies in the facility to make sure that production is efficient, so to make sure that we keep margins on track. I don't know if you want to add something.
The only thing I would add in Oregon is that we've gotten the thing about all of this pricing pressure and all of this dog fighting in Oregon has just made us sharper for California. So we've learned it's like, how do you say, what is it? Necessity is the mother of all invention. And in order to continue, we just returned to gross profit in Oregon this year. I mean, we had negative gross profit last year. And we've just gotten more efficient. So our distillate manufacturing, our shatter manufacturing, the way we're doing stuff also has gotten more efficient. And that translates especially into California, where people are still living in a higher margin reality. We've mentally gone in there with our sort of Oregon, low cost mentality.
Your next question.
That sounds very great. Thank you.
Thanks.
Your next question comes from Brent Buchanan with CIBC. Your line is open.
Hey, Karen. I think I missed this. I apologize. But I think there was a comment made about how much of the convertible debentures left. Was it? There had been 12 million, I think, and is it 6.8 now? Is that what I heard?
That's correct. 6.8 is left.
So I imagine, given that
6.8 of the convertibles left at this point, Philip, are you sure? I think at June 30th. Wow, yeah. That's a lot. Yeah. No. That's you're talking about. No, they're talking about how much is left on the balance sheet. On the balance sheet, it's I think 12.8. It's 12.8, right?
No, 6.8.
Is what's left on the balance sheet on the convertible?
Yep. Yeah, you can see it in long-term liabilities. That's what's left of the convertible.
Wow.
A lot has been converted.
Wow, and
you're talking June 30th?
This is US dollars. So like that compares to a total raised after fees of $13 million.
Okay. I was just curious. I assume that if you can talk about what's recently been happening in the market, but there's been a lot of volume, and I've been assuming that there's been more of those convertibles being done now, maybe because the hold period's off, people can convert and sell. I'm just wondering if you're experiencing that.
The conversion price is 65 cents. So right now there's no activity. But when we issued the convertible, the shares were trading. They were trading up, and they were going to 80 cents. So it was really quite. After we issued the convertible, that a lot of the debenture holders actually converted. So right now there's no activity.
Well, I know the economics might not work, but it might be happening anyway. Maybe accounting for some of the volume now. You're not seeing that?
No, because we get these conversions in, so we see what happens.
Okay, thanks.
Your next question is from Eric Tessier with Tessier Services LIM. Your line is open.
Hi there. Thanks for having me on. Wondering if you could speak any more to the restructuring of warrants that you spoke about. Personally, I hold a large number of the 90-cent strike price warrants, and I have a small amount of concern that if there is a restructuring of some of the 80-cent warrants, that might negatively affect the 90-cent warrants that are being publicly traded. Can you speak to that at all?
We're still working on a plan, but we've taken, given our backgrounds, we've taken all of that into consideration.
Yep.
So I wouldn't worry about it as much. But I think a critical factor that we've learned, and one thing that's important for us, and even with the stock, is to make sure that people have adequate liquidity. And that's also a primary concern. But that's all I can really speak to at this point. Okay.
I appreciate that. Thank you.
But cognizant of that. Thanks. Okay.
Absolutely. Yep. Take care.
Your next question is from Mike Van with Chromium IT Solution. Your line is open.
Hi there. Just one question. So I understand that we're paying our staff using the shares, but how come it's every time you're paying like 20 cents below the share price?
Okay, so this is a good question, but to be very clear, what I told people when that happened was that we didn't have a crystal ball. And when markets are tight, we want to preserve cash. So at the time we agreed to the conversion of a shareholder loan and some larger debt items, we didn't see a stock rebound like we saw before. And again, I want to make the record really clear on this, that neither Philip, Andreas, or I have ever received shares at a discount, right? So when we convert into shares, our salary into shares, we do it on the VWAP without any discount. So, I wish I had a crystal ball, and I wish I knew the stock would pop like it did. It's settled back down a little bit now, but I didn't have that. So that's what I have to say on that one. But thanks for the question.
No worries. Thank you.
Your next question is from Victoria Kemp with BCRF. Your line is open.
Hi. Thanks for taking my call. Can you hear me?
Sure.
Hello? Okay, great.
Sure.
So my question is kind of referring, just if I'm looking at the revenue, and this time 9, and it cost you 8. So what's going on with the margins there?
Philip, you want to address margins? Because you want to address them, Philip? Because you've looked at this hard.
Sure, yeah. I didn't really hear the question because it faded away from me, but
she just wants to understand. She wants to understand why overall, as a company, Q2 margins were lower than Q1. And so strip out the biological effect, explain to her, forgetting about IFRS biologic, explain to her, what's going on there, which is something we've looked at pretty
the effect is really like, first of all, we have pricing pressure Q on Q. So prices are going down in Q2 versus Q1 for larger parts of revenues in every state where we are, with the exception of distillate in Oregon. At the same time, your raw materials are being valued on a FIFO basis, which means that there is a time lag for your margin to catch up with the decline in when you buy your raw material now. You would buy it at a lower price than that we use when we calculate the margin, because we use the FIFO method. And that is an important factor in the margin pressure.
So really it's less cash on cash, and it's more book on book due to FIFO accounting. So so the point is that we have to have a certain number of days on hand of inventory, especially in Q2 and Q3, because a lot of people don't know this, but both California and Oregon are extremely seasonal markets and dependent on the harvest that come in late Q4 or middle of Q4, depending on what part of California or Oregon. And so by the time we stock material, you typically see a margin bump in Q1, a little bit of a decrease in Q2, flattening in Q3, and then margins going up in Q4. And that's the FIFO effect. And then compounding that is price pressure with new entrants, which we've seen historically in all markets. Thanks for the question. I think
Go ahead. One thing, I just want to verify one of the earlier questions in relation to the convertible, how much is outstanding. I should add the following thing. Like this convertible has an equity component, which we value, and a liability component. The liability component that is still on the balance sheet, which you see as a long-term liability, is $6.8 million. But then the equity reserve for the debenture, which you'll find in shareholders' capital, is actually 2.2, which makes that the total is actually $8 million if you look at it that way, because you have to break this convertible down in an equity and a liability component. And then what's converted is $6 million. And that gets you back to your around $15 million.
Okay. I think that's. Operator, I think we have one more question, so we'll take it.
Certainly.
Keep going.
Your last question comes from Dan Murphy, stockholder. Your line is open.
Thank you. Thank you for taking my call. I have a question. With your extractions, I'm curious, what do you anticipate the harvest is going to be in the fall coming out of California? And you guys have the warehouse space to accept, hopefully will be a large amount of material.
Okay, so that's that biomass procurement as a CEO weighs on my mind in California more than anything. I think it's like the single most important sort of factor in my mind. And we've been really, really adept, given our sort of Emerald Triangle roots and having been in this business for such a long time, at procuring biomass in California, in particular in the Emerald Triangle. And we forged very deep partnerships with 2 or 3 critical distributors and farmers up there. And so all I can say is that we're looking to take those partnerships and make them much more closely aligned to us, which would give us continuity of biomass and give us the ability to store ample amounts of biomass right at source, and give us the ability to pack and prepare material for extraction at source. But it was a very good question, and it's something that has allowed us to succeed where some of the others haven't been able to succeed as well.
All right, thank you.
Okay, this does conclude the Q&A period. I'll now turn it back to the presenters for any closing remarks.
No, everyone, thank you for attending this call, and we'll just continue to work hard as we're doing now, and continue to hopefully deliver good results, and we'll be opportunistic, even though markets are really tight right now, and always looking to ways for maximizing shareholder value. And as I said, there are no bigger proponents of the stock and the company than Philip, myself, and Andreas.
This concludes today's conference call. You may now disconnect.